Welcome to Illuminati Silver. We tell the truth about silver. Today is Friday the 17th of September 2021 and we're producing our gold and silver morning update and price forecast. Gold and silver prices plummeted yesterday, but we are seeing a weak recovery this morning. Why? Retail sales and the prospect of early Fed tapering. So let's take a look. Welcome to Illuminati Silver. Good morning to you all. It's Friday, 17th of September 2021, 09:55 GMT +1. It's a sunny, bright, and hopefully encouraging morning, though we have to admit that the news headlines are not that encouraging, particularly for the United Kingdom. Because as we can see here, UK retail sales fall in worst stretch for shops since 1996. Let's take a quick look. UK retail sales fell unexpectedly for a fourth month in August, the longest stretch of declines in at least 25 years, raising concerns about the economic recovery as a resurgence of coronavirus cases and supply shortages take a toll. The volume of goods sold in stores and online fell 0.9% after a 2.8% plunge in July. Food sales dropped sharply as consumers steered spending towards bars, eating out, and entertainment events newly reopened after lockdown. Doubts are growing about the outlook for consumer spending, which powers the British economy. COVID-19 cases are rising and millions of households now face a sharp squeeze on living standards after a surge in inflation. Meanwhile, Brexit and the pandemic have dried up the pool of workers retailers rely on and created supply chain disruptions. Not looking good. Retail sales, terrible. Compare that to the retail sales in the United States announced yesterday, which we'll talk more about in a few minutes. Retail sales were up 0.7% for August, against an expectation of minus 0.7%. So we are getting a very different picture. The other thing to perhaps share with you, which to many who've suffered during this pandemic, and we ourselves to some degree have, but nowhere near as much as many, is when we see things like this. Private equity is smashing records with multi-billion merger and acquisition deals. The private equity industry is on a spending spree like never before. Buyout baron Blackstone Group Inc., Apollo Global Management Inc., KKR & Co. and others account for a record 30% of global transactions this year, with deal flow and fundraising close to all-time highs. Investors are flush with cash and looking to put the money to work. In the US, a private equity consortium recently announced one of the biggest leveraged buyouts of all time. And in the UK, PE funds have been at their busiest since the financial crisis, targeting household names including grocery chain W.M. Morrison Supermarkets plc. Wait for this. By mid-2021, the sector had amassed a record $3.3 trillion of unspent capital, including $1 trillion held by buyout funds, giving it significant firepower for fresh acquisitions. And these are the very things that are keeping the stock market alight, when logic dictates that it, perhaps certainly in the United States, arguably in the UK, some would argue less so, but still in Europe, the stock markets are too high compared to projected earnings. But all that they do is that they, to a large degree, allow higher price to earnings multiples and say, that's the norm, the new norm. BBC News Main headline, as mentioned, shop sales fall for fourth month as more dine out. So we're all spending money in the restaurants. I'm constantly worried about being evicted. Debt charity step changes calling for emergency support for renters who've fallen behind on payments. Overhaul of international travel rules expected. And this is quite important, actually. China applies to join key Asia-Pacific Trade Pact. Just a 30-second look at that. China has applied to join a key Asia-Pacific Trade Pact as it attempts to strengthen its position in the region. The move comes the day after a historic security deal between the US, UK and Australia was unveiled. The pact that eventually became the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, was created by the US to counter China's influence. However, former President Donald Trump pulled the US out of it in 2017. Chinese Commerce Minister Wang Wentao said the world's second largest economy had submitted its application to join the free trade agreement in a letter to New Zealand's Trade Minister Damien O'Connor. You couldn't make it up, could you? Created to prevent China, and China applies to join. US news. Thousands converge under US-Mexico border bridge. This is to do with the Haitian migrants. The man who hopes to topple Trudeau. World's biggest tree gets blanket as US fire rages in California. When will booster jabs be available in the United States? Father sues school for cutting daughter's hair. US lawyer charged for lying in Russia probe. That's an interest. He is accused of hiding ties to the Clinton campaign when submitting a tip about Donald Trump. And how TikTokers took down a Texas anti-abortion site. Okay, let's look at the financials because that's really why we're here. Well, the dollar index spiked yesterday and very nearly reached the 93 level again. It was as high as 92.93. This morning, it's fallen back just slightly at 92.8, but still considerably higher than when we looked at this yesterday morning. So why did the dollar go up? We'll have a look in a second. Energy prices broadly down a third of a dollar. Equity markets, well, the Dow Jones yesterday was down further than this, but eventually closed down just under 0.2%. And the S&P 0.16 down, but the Nasdaq actually closed up 0.13. Asia Pacific, the prime ones broadly up between 0.5% and 1%, and UK and Europe again up between 0.25% and 1%. So equity markets doing a little bit of a recovery. So what happened yesterday that caused the dollar to rise so significantly? Well, what we've been saying all week. Retail sales, retail sales, retail sales. Coming in at 0.7% compared with expectations of minus 0.7%. And if you exclude automobiles, up 1.8% compared with expectations of 0.2%. Now what this has done is to some degree counteracted the negativity surrounding the last non-farm payrolls jobs report, and now suggests, certainly to traders, potentially now to bankers, that this is the time that tapering can start. We're not totally convinced because, in our view, we are seeing varying and differing economic data. Industrial production, for example, up 0.4%, but that was against expectations of 0.5% and against July's figure of 0.8%. So, whilst it's okay, it's hardly setting the world alight. What has to some degree helped bankers further is that the CPI index is 0.3% compared to 0.4% of expectations. So that, in a way, would reduce the need necessarily to cut back on tapering, unless they take the contrarian view that, well, all things are good, so we don't need now to actually maintain the bond buying program that we currently have. It can be looked at two ways. And this is the dilemma with economics. You can have the same data, but be looked upon and interpreted very differently. Now, today we have the UMich Consumer Sentiment Index, which may have a bearing, quite frankly, but we'll be surprised if it's significant. But let's look what happened to gold and silver. Now, yesterday we produced a video. Let's show you on screen. Why did silver collapse today? We published it last night. We got a fair number of views, in fairness. We got 2,000 views on that yesterday. So we highlighted there why we saw silver fall to as low as $22.86 and gold went down to $17.55. That was the time of publication, but they had been even lower than that. Now, we did suggest last night that they might recover a little from yesterday's figures, and so they had. So over the last 24 hours, gold fell as low as $17.46. When we published the video, it was $17.55. It's now $17.64. Still, on a 24 rolling cycle, down $18. And certainly lower than the week start, which was at $17.88. So you're $22 still down on the week. But as you can see on the screen, there is a slight recovery going on. Silver, when we produced yesterday's video, was standing at $22.86. It did go as low as $22.63. We wanted really to see it go above $23, which it has done, and is currently $23.11. But that's still down nearly 2% on a 24-hour basis, or 46 cents. We're seeing the recovery here. If we compare it to the week start, we started the week at $23.77, so we are in fact down 66 cents on, if you like, Friday's close or Monday's immediate open. Gold and silver are not out of the doldrums yet. We can hope there will be a bit of a recovery today, just to equalize and balance everything out. We've had some comments that this is entirely market manipulation. Well, let's make one thing clear, and we'll do a separate video on this. There is manipulation going on in the silver market, but it tends to be traders trying to front run prices down so that they can then basically take advantage, A, on shorting the market, because when traders have an idea where stop losses are, they know if they push the market to a certain level, people's stop losses cut in, other people's shorts then come in, because with electronic trading it's all done automatically, and prices are driven vastly down. Then, of course, when it gets to the level that they feel that that's appropriate, then the longs come in and it pushes the prices back up. Some viewers suggest this is central banks trying to control the market because they're fearful that the dollar will collapse if silver rises. Absolute crap. That's the only word I can use. The silver market will have zero effect on the value of the US dollar. Let's get that through people's thick skulls who believe that silver's manipulated because of the link with the value of the dollar. Rubbish. Don't know what you're talking about. Go and listen to some pumper idiot who has mind controlled you. The silver market is tiny. Central banks do not hold silver. JP Morgan holds silver primarily for its clients. They may, and we can debate this, hold silver to manipulate the market. That's a possibility. But do not ever on this channel continue with the rubbish that silver is being manipulated by government because it fears that the dollar will collapse and everyone will use silver as a currency. It will never happen because the market for silver is too small. Double the price, quadruple the price, 10 times the price, 50 times the price, and it still will not compete with the amount of currency out there. That's my rant over. I'm fed up of listening to idiots comment about control by the government. They don't want silver to go up. Well, They weren't very effective when it rose from $14 to nearly $30 just over a year ago, were they? Or was that allowed to happen so that they could then spend the next year gradually bringing it back down? Absolute tosh rubbish. Forget about it. Now, we can have a very different debate about whether traders and some banks, yes, trading banks, trying to front-run prices, trying to manipulate the market. Yes, that's a different situation. Why are they doing that? To make profit. What's happening to cryptocurrencies? A market that we think, to some degree, is even more manipulated, not by governments, although governments, if anything, are trying to do everything they can to destroy it, but by YouTubers pumping cryptocurrencies. Yeah. Like the gold and silver pumpers coming on, they've bought in at relatively low levels, and then they tell you, you've got to buy it, you've got to buy it, you've got to buy it, you've got to buy it. And this is why, to a large degree, we've got a market cap of $2.155 trillion. Bigger than the silver market cap and a quarter of the market capitalization for all of the gold in the world. All in a very short space of time. That's it. Enjoy your Friday. Had my rant. Have a great day, everyone. Tomorrow we have our weekly update where we'll actually go into a little more depth with where we feel silver's going to go next week. Today we think it's going to meander at or around the price it is now. May improve ever so slightly, because there isn't a great deal of economic data coming out to adversely affect it. Of course, any black swan swimming by will eradicate anything that I've just said, but hopefully that won't happen today. Thank you for listening. Give us a thumbs up. If you hate us for our rant, give us a thumbs down. Have a great day. Subscribe. Speak to you tomorrow. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.